Your boss calls you into the office. You've been crushing it for the last year, and finally, the raise you've been waiting for, 15% more on your paycheck. You walk out of that meeting on a high. You deserve this. That weekend, you do something small to celebrate, a nicer dinner. Then a few weeks later, you upgrade your apartment because, well, you can afford it now. Then the car starts feeling a little outdated, so you lease something newer. Fast forward 8 months. You're making more money than you ever have in your life, and somehow your bank account looks exactly the same as it did before the raise. Here's the truth. Nobody tells you when you get that raise. More income doesn't automatically mean more wealth. It just changes what they're broke at. Most people think the danger zone is when money is tight, but the most dangerous moment is right after things start going well. That's when lifestyle inflation kicks in. Psychologists call it hedonic adaptation. Your brain quickly adjusts to anything new, and once it feels normal, you stop noticing it as a privilege. Let's say you're earning $4,000 a month and get a 15% raise. That's an extra $600 a month, $7,200 a year in new money that didn't exist before. If even half of that disappeared into lifestyle creep, you'd lose $3,600 a year. Over 5 years, that's $18,000, money that quietly vanished. A meaningful share of Americans earning over $100,000 a year still report living paycheck to paycheck. This isn't a low-income problem. It's a behavior problem. Each individual upgrade feels justified. You earned it. It never feels like one big decision, and it feels like 10 small, reasonable ones. Step 1. Name the baseline before it shifts. Write down your current expenses before you get a raise. Step 2. The 50% rule. Every time your income increases, automatically send half of the increase somewhere. You can't casually spend it. So if your raise is $600 a month, $300 goes straight to savings before you even see it. The remaining $300 is genuinely yours to enjoy guilt-free. Step 3. Upgrade slowly, on purpose. Instead of upgrading your apartment, car, and wardrobe all at once, pick one. Step 4. Protect the gap, not just the income. The gap between what you earn and what you spend is the only thing that actually compounds. At 8% annually, after 20 years, that single habit alone could grow to roughly $176,000 from simply protecting half of one raise. Let me tell you about a guy I know. Mid-20s, got a solid promotion, real bump in income. For the first year, he did exactly what most people do. 3 years later, his investments had grown into a real number. The gap between what he made and what he spent finally started to widen. The next time you get a raise, don't ask, "What can I afford now?" Ask, "What's my plan for this before I see it in my account?" Next raise, next bonus. Before you spend a single dollar, decide your split. Half builds your future, half lives your life. If this made you think differently about your last raise, hit subscribe. Have you ever gotten a raise and ended up feeling just as stuck as before?